Next unit is relating with Unit 6 under this Black 2, that is Security Exchange Board of India for MCOM first semester. So, Security Exchange Board of India. So, as the name itself indicate that RBI is regulating all the activities relating to the bank, but in case of SEBI it is regulating all the activities which are relating to the securities. Okay, the securities. So, this will regulatory body for the securities and commodity market in India under the administrative domain, that is Ministry of Finance within the Government of India. So, this was constituted as a regulatory authority over the years constitute in the capital market, and from the year 1988 through legally SEBI came into existence in the year 1908. So, legally it was come into existence in the year 1908. It was operational and effective from the 1992, and it was empowered to secure an autonomous positions to regulate the security market operations in India. So, the major functions of this SEBI are: first one, protective function. So, under that protective function, as we know, when we are planning to invest our money into a securities market, like when we are planning to invest our money into a any company's shares, debentures and all. So, then we have a question, okay, what is the good company where we have to invest, okay. So, whether it is protected. So, when we are visiting Bombay Stock Exchange, National Stock Exchange, all the stock exchanges have listing of various companies securities. There we can state or we can observe their market prices. Accordingly, we may invest with the help of demat account, right. So, under that, in case of protective function, when we have strongly protection with the help of SEBI, then it is a safer move to invest it. Any unorganized or unlisted companies shares are highly volatile, right. So, to avoid that, in case of protective function, RBI have prohibits insider trading, okay. Insider trading as insider, okay. So, there is a position are the companies who are trading insiderly, that includes trading with only a directors. For a directors, they have having a higher rate, or employees and promotes. So, they should avoid all such things. For the general public, general investor, what the amount they are showing is totally different from the amount which they are showing for the director, employees and promoter, that is an insider trading. They should avoid such kind of insider trading. It should be a totally transparent enough to invest whatever the amount, or even a single amount, number of bulk amount, whatever it may be, that should be a transparent. So, that is the major function of this SEBI, to prohibit such kind of insider trading. Next one, check price rigging. So, this rigging is the act of causing unnatural fluctuations in the price of securities. Either the price of that particular shares are highly increasing or highly decreasing. To unexpected such kind of what we call losses for the investors, SEBI maintain a strict watch in order to prevent the such malpractices. So, that is why it is called as a watchdog of this securities market. Promoting fair practices. Whatever the common layman may invest and industrial person may invest, they should have the same policies and practices, that is promoting fair practices. Regulatory function. So, under this regulatory function involves the establishment of rules and regulation. So, in case of any registration and regulations of the stock brokers, sub brokers, registration, all the issues, merchant bankers, underwriters, portfolio managers, etc. So, then the registration and regulations of the working of collective investment scheme relating with mutual funds. So, these registration and regulation procedure for all these regulating the proper functioning of their field. Then prohibition of fraudulent and unfair trade practices. Okay, they should reduce such fraudulent or malpractices or any insider trading, unfair trading practices. Regulating substantial acquisition of shares and takeover of the companies. Okay, mergers, takeovers, all such things there are having a regulations relating with their position, assets they are treating, profitability and all. Next one, developmental function. For developing concern, the SEBI facilitating various function, they are provide the investors with a knowledge of the trading and market function. So for that they have promoting the investment education. So RBI coming with new form of education awareness program and initiating from the education or school level or degree level to know more about this trading system, securities market and all. Training for intermediaries. Okay, so sub brokers, they may not have enough skill to what we call working with the stock market. So it will facilitating training for such intermediaries, what way they have to trade. Next one, conducting research and publishing information useful to market participation. Continuously they are undergoing the research and stating the opinion relating with the market participations of this securities market. That will also helpful to know more about the functioning area of this securities market. Then promotion of fair practice. As I mentioned earlier, there is no insider trading. The fair practices, what is the price which is shown in the market, that is BSE, NSE, whatever, that is the fair price we have to purchase or we have to sell that shares. Promotion of the self-regulatory organization. So we have to promote the self-regulatory organization. Each organization have such kind of regulation instead of giving such kind of problems or malpractices. So this is all relating with the functions of SEBI. Next we have a primary and secondary market. Okay, so when we are planning to invest our money into a securities market, the prices of particular companies are listed in the stock market, right? So these are all listed and already established or come under the secondary market. So now there are some avenues like primary market is a market where fresh securities are introduced in the market. So when the company introduce its shares firstly or first hand securities to the general public, offer directly to the public, that is a primary market. When it is commence its operation, when it starts its business, first the company is going to approach the general public to invest, that is primary market. So primary market is a first hand securities, but in case of secondary, it is a secondary. All the existing securities are traded, we are buying and selling with the help of this secondary market. Okay, that's all relating to our stock market. So the primary market is a new securities market, secondary market is an existing markets securities are traded. Okay, the major function of this primary market, new issue offer. As I mentioned, when the company firstly it introduce its operations to the general public, introduce its shares to the general public, that is introduce its shares, issue such shares with the help of initial public offer under this new issue offer. Underwriting service. Okay, so they are going with an underwriting form of what we call arrangements to purchase some shares and facilitating the purchasing of shares and distribution of the new issues. Okay, with the help of merchant bankers and all, they are distributing their shares to the general public. So these are all the major function of a primary market. So then what are the types of primary market? As we know, primary is a first hand securities which are firstly introduced by the company to the general public. Okay, they have public issue like initial public offer. Firstly it is offering its shares to the general public. There are private placement. So we are issuing our shares to the the company which is planned to invest or start their business operations newly. Then they have their private group of people, they are offering only for such people for purchasing the shares and starting the business. Preferential issue, we have some kind of preferential issues, based on that we have issuing such securities to the general public. Then qualified institutional placement. So under this we have some qualified institutional support to invest, to making some underwriting agreement to invest and move further. Right and bonus issue. So we have already some group of people, the existing one, we are providing options for an existing one either in the form of right and bonus issue. If they are ready to invest, okay, we are providing like 10% opportunity. So based on that they are purchasing, we are giving the priority for the holders one, existing one under the right and bonus issue. So if they are not ready to purchase, then we will go with either public issue and all. If there is a chances, okay, why we are already customers of or what we call security holder of that particular institution or the company in somewhere, we are having some connection, so we are providing an option for them in the right and bonus issue. secondary market. Okay, so once the primary, in the primary market, firstly it is introducing its shares or offering shares to the public. Okay, then after all our buying and selling activity, we are purchasing the shares, we are selling the shares with the help of this secondary market, that is the secondary market. Okay, so some of these entities that are functioning under the secondary market are retail investors, advisory services, financial intermediaries. Okay, and individual persons we may purchase and sell. The retail investors including mutual funds and all, they may purchase and sell the shares, and the financial institution, banking and non-banking financial institutions also purchase and sales with the help of this secondary market. So the major types of the secondary market are stock exchange. Okay, we have different stock exchange, National Stock Exchange, Bombay Stock Exchange. With the help of it is providing a platform to trade our shares. Okay, either we are already purchased, our market price are linked there. Okay, if somebody are ready, they are purchasing it. Okay, it is providing the platform for an existing investor to purchase some more or to sell their securities. Then over the counter market, so it is also decentralized, comprising the participant engaging in trading among themselves. Okay, so that will retain the higher competitive risk for the regulatory oversight, relating with foreign exchange market and example. What is the difference between primary and secondary market? So primary is a first hand security, secondary is a second hand security or existing securities. Okay, let us know the difference between this primary and secondary. So under this primary, securities are initially issued. The first securities when the company plan to commence its operation, when the company start its business operation, firstly initially issued to the help of this primary market. After issuance, the securities are listed in the subsequent market, that is secondary market. So it is a initially issued, but in case of secondary, it's already trading securities are traded, issued securities taken place into the secondary market. Okay, investor purchase the shares directly from the issuer of the company primary market. Who are the issuer? Like Infosys, it is issuing. Okay, we are purchasing directly from the Infosys. But in case of secondary market, the investors enter into the transaction among themselves by having the demat account. They are purchasing, trading, selling with the help of that Bombay Stock Exchange, National Stock Exchange, OTCI, etc. The stock issue price in a primary market remain fixed. Okay, so if they are called like a promotion, discount basis or the fair prices, so that is fixed for all the investor. There is no hide and seek, there is high prices, low prices, no such things. But in case of secondary market, the prices of the traded securities in the secondary market according to the demand and supply of the same, that is reflected in the market. If the market price of that Infosys share price is 2315, the same price we have to purchase. Okay, then the sale of securities in a primary market generate fund for the issuer. When general public, we are purchasing the shares of the company, that will provide a fund for commencing their business operation. But the transactions made in this market generate income for the investors. Okay, so as a generating some income, we are purchasing the shares and selling it. Okay, the issue of security occurs only once for the first time. This primary market is only for first time only. So subsequent transactions all are carried under this secondary market. Okay, then primary market lacks geographical presence. It cannot be attributed any organization set up as such. Okay, if it is commencing its business operation even in Bangalore, but any persons who are not from the Bangalore or who are from Delhi, who are from Chennai may purchase it. So in case of secondary market, and the country has an organization presence in the form of stock exchange who are listed even from India or outside the India, they may purchase under the secondary market. Okay. Next one is foreign institutional investors. So that is so in case of foreign institutional investor, that is an investor or the investment fund investing in a country outside the India. Okay, as the name itself indicate, foreign institutional investor, the other country institutions are investing their money into India, that is a foreign institutional investors. The major key features of foreign institutional investors are, that is an institutional nature. Okay, since it in an institution, it is having a group of people and they are investing their money into a home country. So it is an institutional nature, not a individual client or the shareholder. Then it is a cross border investment. Okay, if they are investing their money in India, like US people or US institution, then it is a cross border investment. So between the country, the investment occur between the country, that is why it is called as a cross border investment. Cross border investment. Okay, next one is portfolio investment focus. Under this foreign institutional investment, we can construct the portfolio. So this is the primary engage in portfolio investment. Under this, we can diversify and creating the portfolio comprising of various avenues for this foreign institutional investments. Diversification strategy to mitigate the risk. Okay, so this foreign institutional investor frequency diversify their investment across the different asset classes, industries and geographical regions. Okay, they may identify some of the scope or some of the need to invest their money into India or China or other states or the country, so they can diversify such things, their investment may made. Okay, then professional expertise. So under this, foreign institutional investors employ a skilled financial professional and analyst who conduct an exhaustive research to know the prior of making the investment decision. Okay, so since if we are a part of India, we are aware about the social economic condition and the exchange rate volatility and the profitability level, market structure and all. So when we are planning to invest US, and the same way US is planning to invest in India, they may not aware about what is the institutional support, what kind of the inflation rate, what kind of the challenges they are having. So since it is relating with all such things, they need some professional expertise. They are conducting the research and giving some inputs. This what is the best avenue to invest in the India. In the same way, we are also conducting the research in US and what is the good avenue, what is the good country to investment, what kind of institutional investment we may take. Next one, regulatory adherence. Okay, so adherence is nothing but maintenance. Okay, so follow. So this foreign institutional investors operate within the regulatory framework of both their home country as well as host country. This foreign institutional investment means it is applicable for both host and home country, right? So if we are investing our money into a US, this Indian investor foreign institutional institution is considered as a home country, the US is considered as a host country. So for regulatory framework, we have to obey, we have to follow the guidelines of this home country, that is country SEBI guidelines as well as the US guidelines. Okay, so they have to adhere the rules and regulations of both home country as well as host country. Then role and functions of foreign institutional investors. Why we need this foreign institutional investors? India is not enough to invest their money. Why we need other countries to invest their fund into India? In the same way, why Indian foreign institutions are need to invest their money in across borders like other countries like other Pakistan or China or Bangla or US, Japan, whatever it may be. So the major role is capital inflows. Okay, this FII, foreign financial institution investors bring substantial foreign capital into the financial markets of the host country. Okay, here we may not have good kind of financial support or financial avenue, financial what we call quantum of financial amount, but the other country may have. So they may come forward to invest their money to India. In the same way, there are good avenues which are facilitating good return rather than the home country. So we are also planning to invest there. So then market liquidity. So the other major role and function of this foreign institutional investors are by actively participating in buying and selling of activities in FII enhance the market liquidity. So it's mainly healthy based balance between the buyer and sellers across the borders. So it provides a high liquidate opportunity based on the market efficiency. Next one, asset price influence. So foreign institutional investors trading activities can significantly influence on the asset prices. If they are working very well, demand for that particular industries are good, so this will influence or increase the asset prices, that is usually reflected on the price of the commodity or price of the shares. So market information. So this foreign institutional investors collect information through research analysis before making an investment decision. So this reports suggest them to contribute the availability of the high quality information benefiting the participants in the market. So we may participate in the other market which is generating a good revenue. In the same way, if we are facing any need, we may borrow fund from the other countries also. Corporate governance and standards. Okay, so this FII frequently advocate for improve the corporate governance practices in the companies. They invest their presence of encourage the companies to adopt high level of transparency and accountability by following the proper guidelines of the governance and the standards which are prescribed timely based. Then the role of this with continuation of that role and functions of foreign institutional investor, market and liquidity, asset price influence, market information, corporate governance and standards. Next one, what is the protections towards this investors interest? Okay, so when we are investing our money into an Indian, again it will come lot of confusion, right? And the same way, if you are any institution is planning to invest their money in other country, again the safety count more, the protection actions or the regulations we financial institutions need to look. Okay, what kind of such protections are there? Okay, issuance of guidelines. So SEBI regularly issues directions to various market participants, including companies launching new offering, mutual fund, portfolio managers, merchant bankers, underwriter, lead managers for FII. This guidelines aim to enhance the transparency and operations and prevent any exploitation of investors with respect to foreign investors or investors interest. Okay, so because of that we are free from all issues and we are planning to invest our money into a safeguard companies or safeguarding our interest to invest amount. Then public interest and advertisement. So SEBI disseminates the public interest advertisement to educate the investors about the fundamental aspect of different financial instruments. Okay, for that continuously SEBI facilitating various awareness program, institutional one, student level, okay, conducting various program, preparing some syllabus and stating all the awareness program. So they have to create an awareness among the general public relating with the available remedies, what kind of the right relating to the investors when we are selling our particular securities in the share market. So still even after 15 days also we are not receiving the amount, what kind of grievances is there? Okay, what kind of problems was occurred? Okay, how to solve it? So everything we can have such kind of information with the help of that awareness program. Okay, next one, handling investor complaint. Okay, SEBI also providing the platform. Okay, there is a redressal cell. There they can redress all the issues relating to the investment. Next one, investors education. So when we are educate more, the what we call there may be a chances of lower risk to facing some issues relating to the investment. Okay, so to educate such people, general people or the institutional, SEBI provides information various investment association and information through a newsletter and awareness program. Then next one, investor survey. So SEBI also conducts some survey, collecting some data, okay, relating with and assessing the investment opportunity, providing a valuable insight for benefiting the small investor as well as the large investors. Then introduction of stock invest. SEBI also introduced stock invest as a new instrument to facilitate the application process for shares taking an initiation and developing such a collaboration with the bank. So as we know, even mutual funds now, without any brokers, even with the help of bank also we are investing in mutual fund and all. So like that, new kind of investment or avenues are available with the help of this SEBI initiations, that is allowing for investor to earn the interest based on all their possible ways. Next, company disclosure. So for disclosure of all their financial report, once we understand that particular reporting process, their profitability level with the help of that statement, that will helpful for us, means investors, to take the right decision relating to investment. So this disclosure practices, disclosure of their financial statement, reports and all, helpful for them to take the right decisions.